Hello and welcome to Business Daily on Trust Television, and we are set to keep you up to speed with major developments in the world of business, finance, economy and the stock market. I am Christiana Amodu-Otinya. Thank you for joining in. First, we'll begin with the headlines for today. We'll begin from what's happening with the Apex Bank. The Central Bank of Nigeria injected $15.3 billion into Nigeria's economy from January to October 2022. And now to issues around debt distress. IMF says 15% of low-income countries affected already. We'll give you more updates in the Business Roundup segment of the program. We'll take a short break, and when we come back, the program will continue. Please stay with us. Welcome back. Now let's get straight into the stock market and see what's happening. We begin from, of course, the local buzz in Nigeria. The Nigeria equities market finishing largely positive, up 0.67%, 52,701.31. And for the activity level, we saw a total volume of 228.48 million shares, valued at 4.44 billion naira, change hands in 3,681 deals on the floor of the Nigerian exchange. The equity cap settled at 28.070 trillion naira. Let's go now to other parts of Africa. Now the GSE is in positive, the Ghanaian was also in positive, but we are seeing that the figure is unchanged. For South Africa, the markets opened positive, 0.69% higher. And also in South Africa, we are seeing the finance minister Jan-Oct saying that he, on the sideline of the World Economic Forum, is saying that the government has a plan to improve energy in the country and also to see how the energy situation can get better in the next 12 to 18 months. Going now over to Wall Street in the United States. We are seeing two reds and one green here. The Dow Jones Industrial Average is down 1.14%. The S&P 500 shedding 0.20%, and the tech-heavy Nasdaq Composite they're up 0.14%. That's the only positive we have. The U.S. stocks are trading cautiously higher, and this move is also following the earnings reports that have been coming in from companies. Going down to Europe, European markets were cautiously higher Wednesday. Now the FTSE 100 in the UK up 0.07% there. The CAC 40 in France 0.25% higher, and the German DAX up 0.05%. Now, there's the outlook is investors are digesting comments coming out from Davos 2023, the World Economic Forum, and also issues around the inflation figures, because the annual rate of inflation in the United Kingdom fell in December to 10.5%, slightly below analyst expectations. Going over now to Asia Pacific region, markets traded mostly higher on Wednesday. Midweek trade in Asia were mostly higher. The Nikkei 225 in Japan said 2.50%. For mainland China, the Shanghai Composite is up there marginally, 0.01%. And for Kospi, the Kospi is in the red territory, down 0.47%. Now, the Bank of Japan surprised the market and talking about its decision to keep its yield curve tolerance band and ultra dovish minus 0.1%. interest rates unchanged. So the BOJ is saying we are not changing the stance currently. We are going to stay dovish, but that's not the situation. There are a lot of comments coming in from what to expect, especially from the U.S. Federal Reserve. Going down to the commodities market, oil prices are climbing, extending previous sessions gain, and this is driven by optimism over the COVID curbs in China. $86.48 per barrel, up 0.66%. For the bullion, talking about the yellow metal gold, the gold is for $1,911. Now, the Organization of Petroleum Exporting Countries, OPEC, said in a monthly report that Chinese oil demand would grow 510,000 barrels per day, and this is its first contraction for the year due to COVID containment measures. OPEC is keeping its 2023 global economic outlook, especially for the oil market, at 2.22 million barrels per day. So the forecast for OPEC is unchanged. For the agro-commodities, The only red we have here is from wheat, down 0.19% at $750.31. For cocoa and palm oil, staying steadily positive, 1.45% and 0.38% up there, respectively. Now let's go to the cryptocurrencies and see what's happening. Now it's all in the red for the cryptocurrency market. Bitcoin, the world's largest digital token, $21,251. Ethereum is at $1,577.58, down 0.18%. And the Binance coin is standing steadily at $300, down 0.11%. So those are the numbers we have for you on the program today. My guest on the program today is Professor Uche Uwaleke, Professor of Capital Market and Foremost Economist. Prof, I really want to get your thoughts on the mood of the markets, what you're seeing, especially from the numbers I just reeled out now. In 1 minute, just quickly, let's hear what are your thoughts?
Well, positive investor sentiments. General feeling of optimism, usually associated with a new year, is still prevailing. You see that in the market breadth, number of gainers more than the number of losers. And you notice that in the last 12 trading days of the year, we've had 12 trading days, the market has only tanked, in 3 days. So it's been, a bullish situation, and that's, for me, should be expected because the continuation of the momentum we saw, in December.
Okay. So the bullish run should be expected, and we hope that the bullish run will continue, especially for the local buzz here in Nigeria, talking about the Nigerian Exchange on Custom Street in Nigeria's commercial hub, Lagos State. However, now let's bring to you a roundup of business stories. Take a listen.
The Central Bank of Nigeria injected $15.3 billion into the economy to stabilize the value of the Naira from January to October of 2022. This was obtained in the banking sector regulator's monthly and quarterly economic reports on foreign exchange market developments. The reports noted that $4.8 billion, $4.81 billion, and $4.18 billion were injected into the economy during the first, second, and third quarters, respectively, while $1.46 billion was injected in October. It added that matured swap contracts rose by 187.33% to $0.82 billion relative to the previous quarter's level. However, the CBN added that sales at the small and medium enterprises and interbank invisibles window increased by 32.4% and 10.0% to $0.46 billion and $0.53 billion respectively, relative to the levels in the preceding quarter. The International Monetary Fund, IMF, has stated that about 15% of low-income countries are already in debt distress. In a new report titled Confronting Fragmentation Where It Matters Most, Trade, Debt and Climate Action, the IMF said an additional 45% of the population is further at high risk of debt distress. It stated that debt is a challenge that many countries face, and fragmentation will make it harder to resolve sovereign debt crises, especially if key official creditors are divided along geopolitical lines. IMF noted that about 25% are at high risk and facing default, like borrowing spreads among emerging markets. IMF also noted that there are signs of progress on the Group of 20's common framework for debt treatment. According to the IMF, countries seeking debt restructuring under the framework will need greater certainty on process and standards, as well as shorter and more predictable timelines. For countries not covered by the framework, however, it suggests that there is a need to improve their processes.
And there you have it, the business roundup of stories making the rounds in the world of business. Our focus on the program today, of course, will be on the comments and updates that's coming out from the World Economic Forum ongoing at Davos. I would be joined, you have already met my guest, Professor Uche Uwaleke. He will be putting perspective to some of the updates that we have seen coming from Davos. The major economic issues are the cost of living crisis, the ongoing war in Ukraine, the climate crisis, the growing food crisis, and the fourth industrial revolution. And we are seeing the comments coming in from Kristalina Georgieva, the Managing Director of IMF, and also Nigeria's Finance Minister Zainab Ahmed was also in Davos, and she was speaking to issues around gender equality, issues around financing for MSMEs. You will get to see more of that in the course of the program. I'll take a short break. When we come back, we get straight into the conversation. Please stay. Welcome back, and thank you for still staying there with us on the program. This is Business Daily. If you're just joining us on the program now, we are looking at updates from the World Economic Forum and what world leaders and business leaders are saying with regards to the global economy and what it will shape out to be like in the year 2023. Now, like I mentioned, the Minister of Finance and the head of the IMF chief, Kristalina Georgieva, made comments at the World Economic Forum. Take a listen to these excerpts.
It's indeed very difficult times. The world has been going through a number of crises, whether it's COVID or climate, several things that we have to cope with on a daily basis. It means we have to do more. We have to find how to do more with less, because the fiscal space is indeed very, very constrained. A lot of our resources is going towards debt service. So for every naira we spend, we try to see how do we get the most benefit from it. And that's one of the reasons why we had to take the decision to say, how does it affect women? Because not only because they're half of the population, but because they are further behind than the rest of the population, and also because they tend to, when you give a woman small business money, they tend to manage it better, and therefore more results, more outcomes. And we need to do this on a consistent basis, and we need to do this according to our plan. So we did a medium-term national development plan that across all of the sectors in the plan, we had the gender lens. And we costed the plan to require $775 billion US. 15% of that plan is contribution is from the government. So we need to now also find how we can support private businesses, both large, small, as medium, as well as small enterprises, to contribute more to the economy.
We saw over 1.3 billion people lifted out of poverty to a great degree because of this integrated world economy. So if you don't like inflation, and I have this feeling that nobody likes it much, why would you want to see a world in which costs of production jump and prices go up and stay there systematically? So that we also look at something that matters to us a lot, cross-border payments and how the financial system operates. When you fragment the economy, you inevitably risk fragmenting what keeps us financially sound.
There you have it. Prof. Uchewu-Aleke is with me in the studio. Now we have comments from Nigeria's Finance Minister and the head of the IMF. Tell me, what are your thoughts on some of the comments we just listened to?
Of course, the Finance Minister was hitting the nail on the head. Talking about the need to improve financing, particularly for micro, small and medium enterprises. We can't emphasize that in an economy where the informal sector is huge. And of course, she has also made the case that in doing so, attention should be given to women. Yes. And it's cheering to note that in the medium-term National Development Plan, women too, have been given attention. I'm also aware that the Central Bank of Nigeria, in the disbursement efforts, that it has been making, also, try to accommodate women. So that is the way to go. We must continue to support small and medium enterprises, particularly in an environment where interest rates are high, where if you say you want to allow a level playing field for, people to access credit from the banking sector, that of course would be difficult. So there is need to have a conscious effort, to channel credit to these vulnerable, seemingly vulnerable, groups, particularly women and particularly micro enterprises, because that's the engine of economic growth. Now, with respect to the IMF chief, remember the theme of the World Economic Forum is cooperation in a fragmented world. Okay, so of course she's only emphasizing that there's need for global economies, to cooperate. She talked about the benefits of integration, and that when countries decide to go it all alone, in terms of the challenges facing the globe, whether it is debt crisis, whether it is inflation, whether it is climate actions, that they don't usually pay off except there is cooperation. I give an example. You see, the way it is now, just as we have heard, 15% of low-income countries are already in debt crisis. 45% of them are also facing at risk of debt crisis. And for emerging economies, okay, where you have the likes of South Africa, and so on, 25% of them. Now, if the challenge is debt, there is no way they can get debt relief if you have geopolitical tensions. If members of G20, for example, where you have Russia, China, US, Germany, France, cannot sit together and agree on a framework for delivering the debt relief. So it makes it difficult where you have a fragmented world. I think that's the point she was making.
Prof, I also want you to speak to some of the issues around inflation, because coming from the year 2022 into the year 2023, and we just had the inflation numbers for the month of December here in Nigeria coming also, we saw that inflation is from an 11-month high. And I want you to speak to issues around vis-a-vis what the World Economic Forum is saying, world leaders, business leaders are saying. Inflation is at the front burner. And I want to make specific reference to what the IMF head said. She said central banks have to be careful not to pull their foot from the brake too early. And we have the MPC meeting just by the corner. In just some days, the CBN governor is back in office. We expect him to lead the team and also speak to the media. Calibrate for me what you are thinking.
Yes. Well, starting from the global front, this inflation thing, if you like, has been part of the lingering effect of COVID, and then became worse with the Russian-Ukraine crisis, with supply chain disruptions, disruptions in the area of food, disruptions with respect to energy, and disruptions with the area of finances. So all these have combined to shoot up cost of living, because cost of living to a major concern for the World Economic Forum. So inflation has been high, particularly in developed economies. In the US, we saw inflation at one point exceeding 11%. But again, let me say, there was something you said at during your introduction, which is not in line with what I've read and what I've been monitoring. Inflation rates in the US in December came in lower. As a matter of fact, at 6.45%. From the November figure of 7.1. So it actually dropped. It is cooling in the US. In the UK, the November figure also dropped from over 11% to about 10.7. So what that tells you is that the policies being adopted by central banks in the US and Bank of England, the Federal Reserve, are beginning to yield fruit. In the US, you recall, the Federal Reserve, Federal Open Market Committee, succeeded in raising the Fed fund rate to about 4.25 to 4.5 range now. Bank of England 3.25. So that's unprecedented, high figure, and that, in my view, has also helped to cool, slow inflation. So that's why the IMF chief was saying that you don't have to begin to change your stance, a lot too early. It's still, a contractionary monetary policy that they are pursuing, even though it's expected that going forward, they may reduce the size of the tightening, from USD, the average of 75%, yes, they may now begin to do 50%, and so on. In the case of Nigeria, again, we have also seen a cooling effect in December, coming in at 21.34 from 21.47, yes, in November. And to me too, that's also a reflection of the lagged effect of the tightening that the central bank has been doing. So that's what that now shows clearly, is that there's a monetary component of inflation. We have always argued in Nigeria that inflation is more of cost push, inflation is more of structural, yes, energy crisis, transport costs, insecurity, yes, and so on, which is of course true. But there is also the monetary part, the fact that you have so much money, in circulation. So with the monetary policy tightening by the central bank, I think that is beginning to have effect. And I also think in the first quarter of 2023, we may begin to see that disinflation. Okay, for the month of January, it may also come in slightly lower, partly on account of the tightening, and again on account of the currency redesign and the cash withdrawal limit. All these have had the effect, of reducing, the money supply or currency in circulation, and to that extent also reduced the, the demand, pressure. So I would say that the CBN's monetary policy stance is beginning to, bear fruit. But having said that, I don't expect the MPC, when they meet next week, to further tighten monetary policy. Yes, you notice between May and November, they moved it by 500 basis points, 11.5 to 16.5, and which is already constraining growth. That also partly explains why GDP growth rate came in at 2.25 in the third quarter of 2022. And expectedly too, the last quarter of 2022 may witness further drop, partly on account of this tightening, because as they further tighten, there is also the consequence, yes, output. And that also applies globally. Part of why you hear the IMF, the World Bank, all of them shouting that, the growth rate for the world will slow down in 2023. As a matter of fact, the IMF chief said it, that it's going to bottom out, yes, in 2023. That if we're going to see any rebound, it's going to be from 2024. And that's because it's expected by 2024, these central banks will have finished all their tightening and will start, easing monetary policy. So as they further tighten, output is, affected. So we can't grow output, we can't grow the economy, when you further tighten. So for the month of January, I don't expect that the MPC will be further tightening. So I expect that they should leave the rate as they are and then further watch. Okay, at least since we've started recording, disinflation, yes, or deceleration of some sort in the inflation rate.
Prof, because I was speaking to a political economist and a business developer on the program, and they are also maintaining your stance that this might not be the best time to have another tightening, yes, come on board. But yes, do you, bringing it now to Nigeria, yes, do you think that before we're going to see the easing happen before the end of the year? Although we know, like you said, Christina Georgieva said, the silver lining will come in the year 2024.
Oh yes, I also think the easing may take some time to crystallize, and that's partly on account of the headwinds I also see in our economy, domestic headwinds, likely to come from the prospects of removal of fuel subsidy. The moment you remove fuel subsidy, you're likely to have, a hike in inflation, yes, rate. So I'm sure the central bank will be taking that into consideration. The second factor to the central bank will be taken into consideration will be the expansionary budget that we have, which is largely, going to be financed via borrowing. Yes. And the more the government borrows, particularly when you're borrowing and you're channeling to recurrent, the way the budget is, part of the borrowing will go into recurrent. And when you borrow and take to recurrent, it tends to also fuel inflation. So all these factors, the central bank will have at the back of, will be considered in deciding whether or not to ease. So the easing may come, but it will take, quite some time in order to, number one, to also hearken to what the advice from the IMF saying, you don't have to pull from the throttle. Don't remove your leg from the throttle, a lot too early. But I also think that if this economy has to grow, we need a low interest rate environment. And for that to happen, the interest rates, should come down one way or the other.
Thank you so much, Prof. Professor Uche Walike there sharing his thoughts on the comments that we have seen come from Davos 2023, talking about the World Economic Forum cooperation in a fragmented world. We'll continue to follow up with you, Prof.
Yeah,
Probably after the MPC, we'll see what the decisions will look like also.
Thank you so much.
Thank you once again. And that's the size of the package on the program today. Thank you for investing your time with me on the program. Don't forget, you can catch up on all the updates on our social media platforms, on Facebook, on Instagram, on YouTube. Just tap the subscribe button on YouTube and watch the notifications roll in for you. I am Christiana Amodu Otiya. Continue to stay safe and goodbye for now.